Now we're looking at the fixed income market just in relation to the new rules that the CBN has introduced with regards to access to funds from the official market window. Just give us a rundown on how these rules have affected the type of demand that we're seeing for dollars.
We're talking about the fixed income market or the FX market. The FX market, the rules that have been changed by the CBN in the FX market has actually resulted in several things. One, we have a situation where in the WDAS, that's the official window for the CBN funds, the rates have trended downwards. We're at 151.55 levels as at the last auction. But on the other hand, in the interbank market, we have seen the rates going steadily up and hitting, as at yesterday, 160 levels. So there is actually a lot of pressure in the interbank market for FX and reduced demand in the official CBN window.
So demand is really just shifting from the one market to the other?
Yes, it's been shifted because there have been several policy changes restricting the eligibility of certain types of requests in the CBN window. For example, things like capital repatriation, repatriation of dividends, profits, and so on have been excluded from the CBN window and have been pushed into the interbank market. So you see demand has shifted substantially from that window into the interbank market, and that is causing the rates in that market to go up while we have stability in the official market.
Now, Yomi, in the CBN's efforts to manage the currency and all the volatility, it's now taken really an unorthodox approach this week. It's choosing to become an active participant and trade directly with the banks. So tell us about the test run that the CBN had of this move this week.
Okay, the CBN has been intervening in the market. This week, they started another type of intervention. They actually have two methods available to them. One is via a sort of auction where they would offer an amount and banks will be asked to bid for that amount. They did that the previous week. Now, the second method is where they come into the market and trade directly with banks. And this they did on Tuesday and on Thursday, that's yesterday. Now, as to whether it has had substantial effect in reining in rates, it's a bit limited. I think the effect has been quite subdued, probably because it's more of a test run to see how it would work out, because the volumes that have been offered are definitely not enough to dampen the demand in that market. We have a lot of demand queuing up in the interbank market, and once the rates just dip, it's taken up immediately and the rates go right back up.
Does the CBN have the manpower to be actively trading in the markets?
Well, that is a question that is being touted around, that do they really have the capability in terms of manpower, in terms of expertise to trade in the market. But you see, because they actually just come in for a short period of time, it might for now not be too much of a problem, but it is an issue that is being looked at.
Now, the currency really has been so volatile, as you cited, and there's this huge discrepancy at this point now between the official and the interbank market. But do you have any kind of forecast range that you see the currency trading at next week?
Well, a lot will depend on the amount and the method or strategy that the CBN would employ to intervene. You see, traditionally we have the oil companies usually coming in with sizable amounts at certain times of the month, and this usually depresses prices. But because, like I said earlier, a lot of items have been removed from the official window and moved into the interbank window, we actually have a situation here where there's a queuing up of demand. And the panacea for all of this would actually be the supply to that market to be increased. Without a substantial increase in supply to that market, we see a situation where the rates would probably remain at these levels and maybe even tick higher.
Let's just quickly look at the bond market. What type of demand have we seen coming through? How much activity have we seen also from foreigners in this market?
Well, the bond markets, experienced quite some volatility also and didn't trade for like 2 days this week, but they resumed trading on Wednesday, and we've seen a lot of activity around the long end, especially the 20-year. The 20-year bond has been traded actively, and in fact the yield on that bond has dipped to 14% levels from a high of 16.
Do you get a sense that foreigners are increasing their appetite for Nigerian bonds? We see some investment analysts or investment fund managers from international developed markets in shifting their portfolios to increase their weighting in Nigeria. Do you get a sense on the ground that this is happening across a broad range of funds?
Yes, it is, but it's probably not happening as fast as we would like. But yes, there has been a rise in interest in fixed incomes and even in treasury bills and bonds, but it's not happening as quickly as we would like it to happen.
Is that because of the volatility and uncertainty over where the currency is going?
That is also a major point, because especially when you realize that prior to the new changes in the CBN policies, we had a situation where you could come in through the interbank market and you would go out through the official market, which is more managed and rather more stable than the interbank market. But right now, that window has been closed, and you would have to take your proceeds, your profits out through the interbank market, which is experiencing a lot of volatility at this point in time.